A small biotech stock just shocked the entire market today. Shares of Day One Biopharmaceuticals suddenly exploded more than 65% in a single trading session. No earnings report, no surprise FDA approval. Instead, a massive takeover deal just hit the headlines, and investors rushed in instantly. But here's the big question. Is the easy money already gone, or could something even bigger still happen? Let's break it down. Earlier today, Day One Biopharmaceuticals announced that it's being acquired by the French pharmaceutical group Servier. And the numbers behind this deal are what sent the stock flying. Servier agreed to buy the company for $21.50 per share in cash. That values Day One at roughly $2.5 billion. Now pay attention to this. That offer represents about a 68% premium compared to where the stock closed yesterday. And if you zoom out further, it's nearly 86% higher than the company's average stock price over the past month. For biotech investors, that kind of premium is massive. And whenever an all-cash buyout hits the market like this, the stock usually rockets immediately toward the offer price. That's exactly what happened today. Traders saw the acquisition price and rushed to buy shares before the deal closes. But this surprised Wall Street, because takeover rumors had already been swirling for several days. Investors believed other pharmaceutical companies might be interested. Names like Jazz Pharmaceuticals and Ipsen were even mentioned as possible buyers. But instead, Servier stepped in first and locked down the deal, and they did it with a huge premium. Now the bigger story here isn't just the stock spike, it's why Servier wanted this company so badly. At the center of the acquisition is a drug called OJEMDA. The scientific name is tovorafenib. This treatment targets pediatric low-grade glioma, which is the most common type of brain tumor found in children. That makes it incredibly important in the oncology world. Servier has been aggressively expanding its cancer drug portfolio. Their long-term goal is to become a global leader in rare oncology treatments by the year 2030, so acquiring Day One immediately strengthens that strategy. They gain access to an approved treatment for pediatric brain tumors, but that's not the only thing they're buying. Now pay attention to this. Day One also has a growing pipeline of cancer therapies still in development, and some of those drugs fall into one of the hottest areas in biotech right now. Antibody drug conjugates, also known as ADCs, these drugs work like guided missiles. They deliver chemotherapy directly to cancer cells while minimizing damage to healthy cells. And Day One has several ADC programs targeting solid tumors. Two of the key candidates are known as Day 301 and Emile. So for Servier, this acquisition isn't just about today's approved drug, it's about building a long-term cancer pipeline. Now let's talk about what happens next. The deal is expected to close sometime in the second quarter of 2026, but there are still a few steps that need to happen first. The acquisition must receive regulatory approvals and antitrust clearance. Those are standard steps for deals like this. Until the transaction officially closes, the stock will likely trade close to the $21.50 buyout price. This surprised Wall Street, because sometimes, when a biotech company has valuable drugs, another pharmaceutical giant can step in with a higher bid. That's called a bidding war, and when that happens, the stock can jump again. Right now, there's no official competing offer, but investors will definitely be watching closely. So what does this mean for retail investors? For anyone who already owned Day One Biopharmaceuticals before the announcement, today's move was massive. They just saw a huge overnight gain, but for new investors jumping in now, the situation is very different. Most of the upside has already been captured. From here, the stock will likely trade near the buyout price until the deal officially closes, unless something unexpected happens. And that brings us to the big question. Here's what could happen next. Scenario number one, the deal goes through smoothly and shareholders receive the $21.50 cash payout. Scenario number two, another pharmaceutical company steps in and offers an even higher price. And scenario number three, regulatory delays create short-term volatility in the stock. Right now, most analysts believe the first scenario is the most likely. But biotech deals can always surprise investors, and there's a bigger trend happening here. Large pharmaceutical companies are actively hunting for smaller biotech firms with promising drugs. Instead of spending years developing treatments internally, they often prefer to simply acquire companies that already have breakthrough therapies. That's exactly what happened here. Servier saw a valuable cancer treatment and decided it was worth $2.5 billion. So today's massive move in Day One Biopharmaceuticals wasn't about hype. It wasn't about speculation. It was about a real buyout deal with a huge premium. And for early investors, that's one of the best outcomes you can hope for in biotech. But now the big question shifts to the rest of the market, because when one biotech company gets acquired, it often triggers a wave of new deals across the sector, which means the next takeover target could already be trading right now. So here's the question for you. Do you think another company could come in with a higher bid for Day One? Or is this deal already locked in? Let me know what you think in the comments.